morning, everyone. This is Brooks York, and I'm joined with Sterling Smith from the ASNA Edge Group. In a week with so many special reports on television, we're going to kind of bring you our own special report from AgriSompo North America. A lot of times we look at the headlines each day, and there's always a certain amount of emotion that comes with what we see. But when it affects our daily lives, like what we've seen this week in agriculture, from someone who sells seed to someone who's in the farm or an insurance company, it's different whenever it affects everything in front of you each day. And of course, the situation in Ukraine has affected commodity prices, both to the upside and the downside. Today, we've got a lot of red on the screens. And Sterling, to jump into things, we just wanted to spend a few minutes. And while we might not be able to offer a lot of consolation and to take away anxiety that's out there, I think it does help to offer a certain level of information about some things that are going on. And a lot of times, one fundamental action across the globe triggers two and three. And of course, the Ukraine action has been front and center on most media outlets. And it's a situation that changes by the minute. Sterling, kind of give us an overview right now of how the market reacted initially yesterday to the Russian invasion, and then today, almost an opposite reaction. It's got a lot of folks confused.
Well, we had price action overnight. At the immediate news of the invasion, we saw prices for wheat trade to limit up. We saw corn touch limit up. We saw soybeans nearly limit up. And they held these levels fairly well. Then we had a compounding issue being the USDA outlook report. And this created some nervousness. And when we came into the situation, understand when the wheat and the soybeans and the corn too all trading limit up, that made every fund position fully profitable. Everyone's making money no matter when you bought it, unless you were the poor guy who bought it at limit up. When you see volatility like this generates margin calls. So in a hedge fund, you may be just fine with your corn, wheat, and soybean positions and you're making money, but the guy down the road is the wrong side in the crude oil and he's losing money. You maybe have to be forced to take a risk off. And when markets don't hold limit up, they start to sell off. And we saw this yesterday. The close for soybeans yesterday, particularly for new crop, was just, in a word, it was just awful. The chart looked terrible. And today we're seeing further follow through selling. And I think some of this is probably some hedge pressure right now that's coming in. Two, we have a lot of uncertainty. And when you have uncertainty, you're not going to take a risk on position. You're not going to come in here and sell it. You're probably not going to come in here and buy it. And we're still at a level where I think, most fund positions are still fairly profitable. And really, we're at the same price we were on the 16th of February. So we did lose, a week's worth of gains, but we're still at very good prices here. And it's going to take some calming, I think, to get people a little bit more willing to come in here and buy this. Also, it's the end of the month. And very often at that time, you see people start to adjust positions. We've got March corn, March wheat coming into, and March soybeans all coming into delivery right now. So with that happening, with first notice day and things, people are liquidating positions and they're not coming back in here and buying fresh new ones to replace it because they made money and they don't really, if I were a PM right now, I wouldn't want to be trying to tempt fate either.
Sterling, in regards to Ukraine, what we've seen is maybe not the destruction of some of the infrastructure when it comes to the transport of commodities outside the country, which is something that was really on the market's mind, especially in corn and wheat's situation. What can we make from that, or can we make anything from that yet?
Well, thus far, the only thing we've seen is a shutdown in port activity, which seems kind of obvious. Russia doesn't want to destroy that infrastructure. I think maybe their end game is they want to control all the shipping through the Black Sea. That's a more likely end game. So the fact that they haven't attacked it, again, adds to that risk-off measure for the moment, and funds are liquidating on that. We saw a powerful rally in the vegetable oil space globally, which has been very bullish anyway. The Ukraine is the biggest exporter of sunflower oil. It's a little bit beneficial to soybean oil. That's a lot beneficial to canola. So there may be some interesting things going on with that because the Chinese generally prefer canola and sun oil to soybean oil.
So obviously there are the things in Ukraine that have affected the market, but sometimes it's that secondary effect. And you touched on one of them briefly. Each Friday in the DMO, and everybody needs to look at that DMO this afternoon when it comes out. You talk about speculator positions in the market, and sometimes we can't use logic in these situations. But in an equities market, that we saw a little sell off 2 and 3 days ago. We're up right now in an equities market. How does that affect someone that might be long corn or long soybeans from a spec side, and how does that play into what we're seeing in the markets today?
When we came in with the corn position in particular, we had the second longest net corn position for this time of year that we'd seen in 5 years. We were long, roughly, how many here? About 260,000 contracts. So we know at limit up, every one of these contracts is profitable, the guy who's long. There's somebody on the other side of this who's short, who's getting beat up. And very often you see an easy profit and you have to explain to your boss, hey, I took profits here at limit up. No one's going to question you. If you don't take profits there and the market falls apart, well, they're going to be calling you in a corner and they're going to be having a talk with you. So from that point of view, I think we clearly saw some fund liquidation. And the reports over the next 2 and 3 weeks are going to be important. The snapshot of today's report will be from Tuesday's market positions from Tuesday's close, which at that point we had a price run up. So that number is going to show an unusually long position. I'm going to guess, probably for corn, probably close to 285,000. It would not surprise me that if we've seen 40 or 50,000 contracts of corn liquidated.
So another reason that this market can yo-yo back and forth sometime and go against logic. Now, there's some other headlines that we're seeing, and if you're watching the news, they're at the bottom of the screen. They may not be talked about, but they involve our largest trade partner in China. Yesterday morning, Chinese defense minister came out with a statement in regards to Taiwan. We've seen some news overnight in that. Sterling, you just read some news momentarily coming out of Moscow about Chinese stance on Ukraine. Tell us how the market would feel uneasy in regards to Chinese comments over global events.
What this was provided by a Russian news service, and this is coming from the Kremlin, and this is supposedly the content of the call with Prime Minister Xi. So we have Chinese information and information from the Kremlin here, so we'll put an asterisk by this. But the content of that call was Russia's Putin told China's President Xi that he could be ready to send a delegation to Minsk for talks with the Ukraine. That was the first bit of this. The Ukraine, in the last 40 minutes or so, has said, no, we're not going to go into Belarus and visit with you, which that probably shouldn't surprise anybody. Putin told China's Xi that military operations in Ukraine were necessary to protect civilian populations from genocide. This has been his line throughout all of this. And the last line, which I do find the most concerning, is China's Xi told Putin he respects Russia's actions, affirmed readiness for close coordination and mutual support at the United Nations. Now, we know that a week ago that China and Russia made an energy deal. Russia being able to control the Ukraine, being able to control Black Sea shipping, does create a new market for wheat, in that Russia and China may particularly want to cooperate on this, especially if we see financial sanctions that makes Russia harder to cooperate and harder to do business in the West. Thus far, those sanctions have not really hit anything in the energy space. We'll see how it hits in the grain space. There's a system called SWIFT, which is how money gets moved internationally. Right now, there's a lot of talk about taking Russia off of this. Some countries in Europe are okay with this, some are not. So how much we actually see on this, it's going to be hard to say. We may see a number of bespoke packages about what the sanctions are and how they're going to be in place.
I think all that's good insight, and we don't want to take up too much time, just offering some information out there. Sometimes it's not the one big thing that impacts the markets, but it's the several little things behind the scene. And I think today, what you've seen is what we do know is not a disruption of flow of commodities, potentially in the future out of Ukraine after what's been done. The equities, and that's something that we take for granted so many times. Those reports that you see from the ASNA Edge Group on Friday in regards to spec funds, you can kind of see now how they play their role in big price movements when you get extreme positions there.
Yeah,
And then also,
and the one in
go ahead.
particular was the NASDAQ Composite, which had built a very, very deep short futures position. And we came in yesterday morning trading the futures on the NASDAQ were trading about 400 points lower, about 3%. Well, when futures markets move and they're tied to a cash market and they come in cheap like that overnight and they've been beat up, the actual physical selling of the stock has not happened behind that. It's just a marker. And what happens is no one's going to want to sell in the hole. So all of a sudden you begin to get this vacuum, and that sends the equity markets soaring as these shorts cover and come out of the market, and then you get momentum chasing it higher. I would not take the sigh of relief that we've had yesterday and what we're seeing, at least so far today, is a sign that the problems are all over and everything's good. This is a market that was very oversold. We closed at our lowest level for the year the day before all this happened. So this is a market going through a rather nasty adjustment period. And we're seeing just the opposite going on in the soybeans, in that they spiked up and then fell apart.
Yeah, I think the key word's volatility there, and that's what we need to expect in the short term. Also, keep your eyes on any China headlines. I think that these small Chinese bits of information that come out can really shape our export programs over the next couple of years in regards to commodities. So we'll keep you up to date with what's going on with the best information we've got out there. As always, if you've got questions, comments, you know where to reach us at the ASNA Edge Group. And we appreciate getting to spend a few minutes with you this morning.
Thank you.